you, but I do want to just get to one other topic because we talk about it every day. Bitcoin.
It is out of control. Like, look, let's
talk Bitcoin?
Let's talk Bitcoin. 2012, I was introduced to it. I started to accumulate. 2013, I wrote an article. And
so hold on, just so we know and can feel bad about ourselves, you're accumulating it at what price?
Well, my dollar cost average is around 100 and something.
And you've held it, everything you've bought?
Well, at one point, myself and, so I was introduced to it by a person. I asked him if I could disclose his name. He said no. But he, myself, and another person, all three of us relatively well known in the Valley, we went and we started. At one point, we owned almost 5% of the entire float. In 2013, we've sold, they've sold, et cetera, et cetera. I wish we had kept it all. We didn't. It's fine. But then I wrote an article, and I said, you know what? There's so much asymmetric upside here. This is a thing that either goes to, at the time I said, roughly the value of gold. And at the time, it was about $100 a coin. And so there's very little downside. There's all this asymmetric upside. I said, take 1% of your net worth and buy this schmuck insurance. And it's a schmuck insurance in this kind of very elegant, beautiful way.
I missed the schmuck insurance.
That was at $100, though. What would I mean? I actually started hearing from people that I know very well who don't often invest, who are now asking me if this is the time to invest.
Buy the schmuck insurance now.
Here's the thing. This is now a confidence game, right? There is no real utility in this. This is a fantastic, fundamental hedge and store of value against autocratic regimes and banking infrastructure that we know is corrosive to how the world needs to work properly. You cannot have central banks infinitely printing currency. You cannot have folks with, misguided and misdirected monetary and fiscal policy.
We've done okay.
You just called it a confidence game, which is a con game.
And we've done okay. The economy is built on central banks and built on fiat currencies, where you said yourself how much better life is in every respect than it's ever been, and that's with that as a infrastructure.
So we've seen the first few chapters of this, and now we have to go through this great unwind, right? When all this liquidity now, what happens?
We'll see what happens.
We'll see what happens. And so all I'm saying is to have the ability to hedge that out in a way that isn't fundamentally correlated to the people and the infrastructure that made those decisions that we were not a part of fundamentally, I think is a smart thing.
But the point is, if you haven't jumped on this bus or train or whatever vehicle you want to describe it as, has it left the station?
No. So here's what I would say. The same way that I said in 2013, put 1% of your net worth into Bitcoin, I will put myself out there today. I think this thing is $100,000 a coin, probably in the next 3 to 4 years. And I think it is, in the next 20 years, $1 million a coin. So there you have it.
You're telling people to put 1% of your net worth
at the time.
That's for
it's a lot harder.
But that's for people who have money to play with. I mean, if you're talking to an average retail investor who's looking at this, somebody who's trying to figure out, should I put it in my 401k or should I put it in Bitcoin, you would tell them what?
Well, I don't think that's the actual trade-off. In your 401k, so for example, in your IRA,
Chamath, I'm saying that there are people who have to make decisions about these things who aren't fully invested in the 401k.
So what I'm saying is I own a lot of Bitcoin in my IRA. It is possible. So I did take a small percentage and I put it in there. All I'm saying is there's a small percentage of everyone's net worth.
in the most tax-advantaged way.
Absolutely.
But you have money to play with.
No, but what I'm saying is you could buy the S&P 500 index, buy 99% of that. So if you have $100 to invest, what I'm saying is...
Put $1.
Put $1. And the reason that $1 is so valuable is that it is fundamentally not correlated to the other 99. And just on the off chance that all the people that manage the 99 may not totally know what they're doing, the $1 may actually save us all.
Okay. We are going to be spending a lot more time with you and talking to you on so many other topics as well, and I'm sure we'll come back to Bitcoin too, so thank you.
Thank you.
All of your Fed worship, we found out today, has been misplaced because Chamath, our guest host, says you should sell, based on the Fed's and other central bankers' unbelievable missteps, you should sell everything and buy Bitcoin.
Because it's been so bad so far.
That's what I said. That the world is...
I mean, the dollar crashed like all the Fed critics thought it was going to happen, and inflation
I might have started something between you.
Like all these
I passed it off now.
If the past was an absolute perfect judge of the future, we'd be all set.
You didn't, Chamath, I set up a straw man. You didn't say sell everything and put it in Bitcoin.
I actually didn't say that.
He didn't say that, but what Chamath did say was...
But I'm still willing to argue with him, whatever he said.
I know you are. You're always right. But if there's just slightest chance that these guys are somewhat conflicted or clueless or not, have different irons in the fire for the way they manage currency, you should have something that isn't affected by all that. That's not correlated with what central bankers. Have I got that right?
I think that's basically right. I think you have to basically have a what if the sky falls strategy in any time.
And the unwind is something you're worried about.
The unwind, let's face it.
We don't know what Bitcoin correlates or doesn't correlate with, right? Let's go back to 2008 when we thought there were differences in correlations in asset values. And what we found out in 2008 was, as Jackson Brown sang in the fury of the final hour, that it's a great line. It's a great line. It really describes the financial crisis. In any event, when that happened, all correlations went to 1, right? So we don't know what Bitcoin's correlations really are.
When I mean correlation, what I'm talking about is, at the end of the day, this is a string of letters and numbers that was generated on a computer that sits in a secure wallet. It truly is, in the functional utility of the world, uncorrelated to anything. It is an idea, and it is a belief system, and that may scare people.
Here's a question.
But that's really what it is.
Its correlation is determined by those who hold it, though, relative to their other assets.
Do you have any anxiety that its current rise is correlated to a market bubble, meaning that it reflects that there's just too much money sloshing around, and people have so much money that they're looking for these sort of any opportunity in a way that they might not have 2 and 3 and 4 years ago?
I think bubbles happen when there's a scale of importance. And I think it's very unfair to look at a market that's still measured in the few tens of billions of dollars and call it A, a market to begin with, and then B, that there's a speculative bubble. Maybe that can happen from time to time at such small scale. I think what's more likely is that there's just an overwhelming number of people who literally don't even know what Bitcoin is.
Right.
And then there's a very, very small number of people who are at the periphery looky-looing, having opinions, but have never even bothered to read the definitions.
That's a good phrase.
Have never bothered to open in a wallet, have never bothered to even read the Wikipedia article, but they want to correlate it to a framework they understand because it's safe. And what I would say is, I would suspend disbelief, which is what I did in 2012. It took me 18 months to understand. And I'm reasonably technical. And so what I would say is, other people, if they took the time, may come to a very different conclusion than what is the obvious negative Nelly conclusion.
I think it would be really elegant if the bubble itself helped create the answer to what caused the bubble. In other words, the central bank
Bubble.
I completely agree with you.
That would be a real, in the way the universe works, that would be interesting.
Because then you'd really see whether the emperor had clothes or did not.
See, there is a bubble from all the money sloshing around.
That's the real bubble.
Bitcoin is the answer to the profligate moves.
Hold on. I thought the market was up on the Trump economy.
I'm not necessarily talking about just...
Hold on. You can't have it both ways. It can't be a bubble if it's the Trump economy with fundamentals underneath it. I'm just giving you a hard time, Joe.
Talking more about a bond bubble.
Bond bubble, but also, this is an unusual time where all assets seem to be inflated to a higher degree. And the question is whether or not the Fed has inflated this. When you look at what's happened to the money supply, a lot of this extra liquidity in bank or excess reserves has not been converted or created into either loans or money, Joe. So the idea that somehow there is this froth or bubble in the system from the Fed is a little bit negated by the idea that it's not been turned into money.
It's the bond bubble. The stock market, I would say, on a price to earnings basis is not in bubble territory.
Can I just?
Do you think the stock market's in? I don't think.
I don't know. I don't think about the stock market. But let me just.
I don't think so.
It's the underlying earnings that this is based on.
The Fed is reducing its balance sheet, and it has plans to reduce its balance sheet. You would think that in that case, the market would price in the forward plans of the Federal Reserve in that time period. Long paper has declined in yield.
That's because it's a global bond market now. There's central bankers headed the.
Or maybe there's tremendous underlying demand for long-dated risk assets, and it's not a bubble.
I mean, at the yields in which they offer, I just don't think that really is true.
But people are going out every day and buying in this market, not at gunpoint from the government, right? You could almost make an argument that we have a deficit of long-dated paper that the market desires.
That's because in Japan you get 50 cents a year on $1,000.
Whatever the reason, private hands are going in,
All right.
and they're
Let's bring
buying
Hans
this
in.
stuff, and they're
Hans
holding
got
on to
all
it.